Hi guys, can you hear me? No, I didn't buy Roku. No, I bought Roku down here. They got stopped out, and yeah, I'm not too happy about the Roku trade. Not too happy about it. I would be up like 10-12% on it right now, but I tightened up my stop too early, so I really don't even want to look at Roku. PDD is so strong. Look at this. Let's look at some of the gaps. There's not that many. There's Rarect, some kind of... Okay, this looks like a buyout. This looks like a buyout. Yep, this is a buyout. Wow, 100% premium. Not bad, not bad. BBY, I think they had earnings. Pump. No, there's nothing here. Nido. Nope, nothing here. Nothing here. EMRS. Nothing here. Rita. Nothing here. PSTG. PSTG. No. PSTG. No. Fold. No. MT Ameritrade. Nope. Nope. Ooh. No, sorry. UWT. No. Okay, so there's nothing exciting in the gap, on the gapper side. I'm gonna check the news on BBY. I think they had earnings. The short coming into these earnings, this is a perfect kind of high tight looking flag from the lows. Great looking flag. Question is, now that it has gapped up, does it have more downside? I don't know. So they still have negative earnings, negative revenue growth. Whoops, let's see here. PE 5, very low valuation. So the 20 numbers look like this. Earnings are expected to decline another 11% next year, and 21 they're expected to grow 3%. So these are not really exciting numbers. I'm gonna look at the let's see, fly on the wall. What does this thing say? Wait, no, they didn't have earnings. Wait, what? No, they did have earnings. I can't see an earnings release on the fly on the wall. I have to look at briefing. Oh, it's change of CEO. Okay, okay. Because in MarketSmith there's this little asterisk that means they had earnings recently. So I just assumed they had earnings. So okay, okay, they had earnings the 2nd of October. All right, all right, all right. Let's see if the CEO can bring some magic. Too bad it's gapping up on this news. It would have been better if it had an organic breakout of this range and then gone to like 12.50 on its own. Now this yin, I got stopped out yesterday for a tiny loss because it tanked late day and I just closed it. I didn't want to hold it because look at how weak it was. I didn't want to hold it overnight, and now it's gapping up again, and actually it was gapping down a lot in after hours. This is just so volatile, just crazy. These headlines daily about the China delegations and this and that, oh my god. And also got stopped out at Nugget, closed week, and now it's gapping down. Yeah, I can't get anything going. This is why the Roku is so frustrating, because I got stopped out for a small loss and then it went straight up from there. Not that it's a big mover so far, but if this thing goes like 140 or something in a short amount of time, I'm not gonna be very happy. Because I really need a runner now. I've taken a lot of like small losses every single day. That's fine, that's how I roll. Small losers, big winners. Small losers, big winners. That's my mantra. What are the indices doing? We are opening up kinda break even. Break even, okay. The snap, unfortunately, it's gapping down. Oh god, no! Don't gap. Now, if this thing had gone like, you know, open kind of strong and maybe pushed towards like, I don't know, low mid fours, this thing I would have sized in. I mean, I would have done 100,000 shares. But now it's gapping down. I mean, the setup is ruined. God damn. I was so happy when I saw it squeeze late day yesterday. You know, I covered it for a tiny profit because I had partial size and I didn't really care about the trade. But I was really excited for this snap today. But now that could have been like a $50,000-$70,000 trade if it had gone to like low mid fours today and then reversed. But now it's in the middle of the range. It could go up, it could go down. There's no edge. Not much anyways. Not right now. A little bit annoying. It feels like it's gonna be a very slow day today also. Just because there's not much on my watch lists. And the market is still in the middle of the range. So I may cut the stream even earlier than I did yesterday and the day before. Because there's nothing to do, there's nothing to do. That's just how it is. What's ASHR doing? Okay. KWeb doing. Oh, sorry. KWeb. Yeah, China's daily ping pong action in China. The China indices. Great for day traders. Not that great for swing traders and position traders. Oh, now we have some alerts coming. Oh yeah, okay. MIK. Now this is a similar chart to BBBY. A high tide flag for off the lows. Be also a multi-year beaten down name. There's another one, and also retail or departments. This is not as good. No, it's not as beaten down and it's more choppy. There's not enough range here. Home is one, another retail name, and then there's this RLGY, some kind of read stock. I don't know what they are specialized in, but this is another like flag of the lows. I traded a couple of times, no go. Still needs, like, it's very clean on the weekly chart to do. MIK. You know what? What's the, can't do much size in this thing. I'll do some. What's the retail ETF doing? Not much. I'm probably gonna raise my stop to the lows of, I think this is Monday's lows. What day is it today? It's Thursday. Wow, I thought it was Wednesday. Okay, I thought it was Wednesday. Yeah, yin is strong, but yeah, I don't know. I'm not gonna trade it. What's Malincrop doing? Yeah, Malincrop finally kind of started breaking down below this range, but it's kind of also holding. It's holding. Had a down candle, but it's still holding the longer range here. Just going sideways. It's not going up, it's not going down. No! God damn. It's too thin. I can't get in. God damn. It's so thin. Like, I can't buy any size in this thing. I was trying to get 20,000 shares. I could field on 4. And now I have to chase higher. Wow. BBBY. Very strong. Took out the opening range highs. Yeah, a lot of these beaten down retail type of names they're going today. Together with this XRT ETF. What's Roku doing? Oh my God, no! I don't want to look at it. No more Roku for me today. That ticker is banned. Like, what I really need right now is a runner, and I had Roku, but I got shaken out by a minimal margin. Oh my God. Oh. What's NAT doing? Is it going higher? Yeah, it's kind of shopping around. Took out the opening range lows, then it took out the opening range highs. This is exactly why I didn't want to chase it down here. Like, in a few hours, if it starts setting up like lower highs and has an intraday break, then I may trade it for a like breakdown. If I can find like a tight setup, risk maybe say 10 cents tops with slippage, but I'm not really excited about it. I would not do 100,000 shares on that kind of a setup. I would do maybe the same size I tried to do yesterday, like 25. Because there would be an edge there, but I wouldn't be super excited about it. Oh, DDS, but this is the pump I was talking about yesterday. I bought some. I have small 2,500 shares because it's so liquid. But heck, if it goes to $100, why not? That's gonna be real money. That's gonna be real money to be made here on the infinity squeeze. Now Nat wants to take out opening range lows again. A TTD doesn't look like much on the daily chart, but it's kind of a clean move. Like, look at how clean it's been, like these moving averages are. They're just going up. The shorter term ones have turned down, but it undercut the 200-day, and now it's kind of starting to base here with some higher lows. It looks great on the weekly chart. Like, I can't show you on this screen. I usually run TC2000 on two widescreen monitors, like huge monitors, where I have a lot of like weekly charts and everything in front of me with the moving averages. I could try to show it here. Yeah, so it found support on these rising moving averages on the weekly chart, and now it's trying to build a range. So this thing actually looks kind of good. Big growth stock, been a huge leader over the past few years, and now it's pulled back and trying to find support. So this is something I'm gonna set an alert on it. Melee is trying to find support in the rising 200-day. What's this MIK doing? Oh no, I only got filled on half. Okay, I only got filled on half. MIK. Should I do some on opening range lows? Nah, it feels like chasing. I don't know. On this gap down, I mean, could it go down to low threes, like 3 teens or something? Absolutely could. No, I don't know. I'm gonna pass. I am going to pass. XLNX, this is another one I bought earlier this year on earnings, on a 5G hype. Didn't have like great earnings numbers, but it was a very clean move. Another stock I probably risked like, I don't know, $2 on, and it ran up like $40. So these are the types of, these earnings trades can be really, really lucrative if you're in early on the opening range highs or even pre-market. But you have to identify the correct ones because a lot of them fade. A lot of them fade. So this is another perfect example, just like Roku and EMPH I've been talking about a lot. And this PDD recently, and also this Doku recently. But these ones I missed. PDD and Doku I didn't trade. I did not trade them. Or no, I actually did trade PDD. But I think I got stopped out. Yeah, I had too tight of a stop. I got shaken out and then it went. Or was it Doku? One of these. Yeah, I think it was Doku. I bought on the like 1 or 5 minute opening range highs and then it took out the opening range lows. I got stopped out and then it's been straight up since. I never got back in. I think it was this one. Could have been a big trade, but sometimes you get shaken out. Or actually I get shaken out all the time. And many times I get back in, but not all the time. I really want stocks like Twitter or AMD or MU to set up, because on these you can buy a multi-million-dollar position with a market order without even moving the price. They're ultra liquid. Or maybe you'll move the price a couple of pennies, but that's it. So these are the best type of stocks to trade, and they have a lot of range. They can go up 50% fairly easily. 30-50% in a short amount of time. Those are my favorite types of stocks. These thin ones, I don't really like them, but those are the only ones that have been kind of setting up. This beaten down micro and small cap retailers and some oil related things. But large caps are the best ones, like volatile large caps. At least now that I have a bigger account. For day traders, or for like if you have a smaller account and want to swing trade, you should probably trade smaller stocks that have more volatility. Now NAT looks like it wants to take out opening range highs again. What's Tesla doing today? Still going higher. Still higher. I got back in some RLGY. So now it's definitely breaking out of this range. And it's been still, it's at a higher lows all the way. Look at this, just higher lows. You can look at the 60-minute chart. There's definitely something going on. But again, another small cap, liquid small cap, which means I can't buy any size. JWM kind of breaking out of this little bottom flag, but it's kind of choppy. I'm not excited about this one. MIK looks so much better. Or maybe it doesn't, I don't know. Don't have to own them all. If one goes, they all go. The whole sector is going. This beaten down retail names. SDNE, a Brazil growth stock. Actually, everything in my positions everything in my portfolio is green, so that's great. Haven't seen that in a while. Hopefully this can last. Probably gonna be red everything is probably going to be red at the end of the day. I would not be surprised. Now we're running up against resistance levels again in the indices. Very, very slow. Are you in Fran? No, I am not. It's super thin. Super thin. I can't trade this thing. But this is the kind of stock it could go up 50% in a few days. It looks great. I think the entry was a bit lower, but yeah, it looks great. This thing could easily go to $20 or something. Another beaten down retail stock. Look at this thing. In 3 years or 2 years, it's down. It was down like 98%. Just crazy. And now it's squeezing on air. Just because it got so cheap, and now I think they are expecting a smaller loss or, you know, whatever. Or they have kind of turned around a little bit. So now it's going up 200% in a month. Yep. But too thin for me. This is a micro cap stock. 45 million in market cap. iGuy has another range here. I wish it was more liquid, because then I would probably add if it broke. Maybe like tomorrow or next week. If it built this little flag even more and then broke out, I would add to this thing. But I'm already in max size for what I can be in this stock. Average volume is like 400,000 or 500,000. I have 4,000 shares, so I don't want to buy more because it's too thin. But it looks good. Just looks great. CDLX. Yeah. Oh my god. Oh no. Oh, the opening range highs breakout on this yin was crazy. Question is it gonna gap down tomorrow? But yeah, this is strong. Really strong price action. This is what I was looking for yesterday. Instead it slammed down late there on some headlines. Oh well, oh well. Oh well. Okay, let's do the scan. Alibaba, leading China stock, has been building higher lows the whole year. Look at this. Whoops. Whoa, what did I do? Okay. Building a big triangle. Big triangle. I don't know, maybe I'm imagining things, but I don't think... I think China, you know, I think the China trade, there could be a big China trade into year end. Have to wait for it. Momo, another China internet stock, been building higher lows, also building a big triangle here. Oh man, I can't even see this chart. There's so much text here. But this was a great trade I had. Biotech gapper, same playbook as always, buy the opening range highs, and this thing more than doubled in just like a month. Big trade and extremely liquid. Look at how many shares it traded this day. 163 million. It went from trading a few million shares per day to trading 163 million shares in one day. It's crazy. I think one of my better trades last year. You don't get many per year, but if you can get like a few on decent size, you know, you don't need much more. That can pay for 100 small losers, a trade like that. One trade like that pays for 100 small losers. Wow, this thing is so strong. Like if this had been an earnings gapper, like let's say they beat the analyst estimates and raised guidance and something like that, I would have been so all over it, this thing. I would have bought this opening range breakout. But now, you know, new CEO, I mean, I don't think there's an edge in that trade. I don't know. Maybe he will turn things around or maybe he won't. But if these would have been earnings numbers that proved that things were turning around, that would have been another trade. I would probably have at least 30,000-40,000 shares of this thing. But now it's just going up on hype that the new CEO may turn things around. Sorry if I missed from earlier streams. What do you think would be the best resource to learn to swing trade like you to StockB? What I would like to know is how I made the transition from shorting small guy. Yeah, I think StockB is a great resource. That's a shorter term swing method. Like if you're familiar with StockB and if you're a member of his site, he also has a free blog, stockb.blogspot.com. I recommend everyone to look at it. He promotes more of a shorter term swing trading method, like 3 to 5 days. And that's a great resource to start. That's a great place to start. That's what I did. That's what I did when I went from day trading to swing trading. I started as a short-term swing trader. Definitely, I would definitely go that way. That's a great start or starting place. Shorting. Anything else you did during the transition? No. Just it took a few years. Going from mainly day trading to mainly swing trading, it took a few years. And going from mainly short-term swing trading to mainly longer-term swing trading and position trading, that took another few years. So you have to give it time. You're not gonna do it in 6 months. Maybe you're gonna do it in a year. Probably it's gonna take 2 years. Like I don't know how you trade, but I guess you day trade. Yes, that's how you do it. It takes time. You're not gonna do it in 6 months. And you need to study. You need to put hundreds of hours in studying how stocks move. Just make some scans. Look at stocks that are up like 100% or more in the past couple of years. Just look at how they move. Build a pattern database in your head. It's gonna take years, but it's gonna be worth it in the end. It's going to be worth it. I'm gonna show you guys something. I am going to show you guys. I'm gonna darken my stream. I'm gonna show you guys in a sec. I'm gonna show you my Evernote. I am going to show you my Evernote. I'm gonna show you a little bit. Let's see. To desktop 3. Is this desktop 3? Okay, now you should see my stream again. I'm gonna show you my Evernote. How much work I have put in building a pattern database. Just look at this. I have tens of thousands of charts. These are different types of earnings gappers. This EP earnings growth. Look at how many. Look at the amount. And this is something you have to do if you want to make many millions in the markets. And this is something I've been working on for, I don't know, 6 years or 7 years, and I'm still this is something I copied from StockB blog, like this part here, these earnings numbers. I have different kinds of time frames, news, etc., earnings numbers, different kinds of theme stocks. These are bird flu stocks from 2006. Look at this stock, went from $1 to $5, and then it had a perfect short opportunity. You get a bunch of these every year. Just gotta keep your eyes open. Summer 2007, there was a bunch of oil stocks that went crazy, up 500, 1,000% in a few months. You get the point. I am organizing my notes charts under folders. I recommend you getting either Evernote or OneNote, or there's another one that's good, because if you want to build a big database, you know, having a folder system, it's just not effective, in my opinion. If you want to annotate charts, you want to, you know, put comments, etc., just Evernote is great. I'm using Evernote. It's not perfect, but it's good. It's good. And there's a new one that I saw some people on Twitter talk about. They say it's better than Evernote. I don't know about that. I haven't tried it. I saved the name somewhere. I can't remember it right now, but I'm thinking about trying it. But Evernote works really well for me, and I've been using it many years. Like there's probably there are a few sites and a few subscriptions or services that I use that, like, if they increase their price 500% overnight, I would pay it. One would be Evernote, the other would be T2000. Like, there are no alternatives, at least not TC2000. I haven't found any that are as easy to use. Yeah, TC2000, like the scans, you can annotate the charts, you can watch lists, you can scroll through hundreds and hundreds of charts like very quickly. It's not perfect, like the alerts are usually slow out of the gate. Many times they're like 10 minutes late, etc. And sometimes the charts don't load for like 30 seconds. But overall, I think eSignal, I don't think eSignal is that great. I look at eSignal, I use for intraday charts, but it's not as great with watch lists and scans and stuff like that. You cannot watch past charts on lower time frames. Yeah, I think they have, I don't know how many bars, like they recently, maybe 6 months ago, increased the amount of bars you could see. Like before you could see back like 2 years, now you can like see 6 years back on the daily chart. I don't know how many bars that is, but let's say it went from 500 bars to like 2,000 bars or something like that, or 3,000 bars. And eSignal also, if you wanted to go back and look at past charts, especially in intraday time frame, you can go back to charts from the 90s, like the late 90s. You can look at you can check the intraday chart, like the 1 minute chart on like Microsoft or something from the late 90s. That's pretty cool if one wants to do that. But yeah, that's also something I use eSignal for. Like if you saw my Evernote, a lot of I had intraday like 30 and 60 minute charts for like all stocks. Those are from eSignal. I went back and looked at the intraday charts. It's all about grinding it out, like putting it in your head. Repetition. So those are two services that I use that I would easily pay 500% more if they increase the rates overnight. I wouldn't even blink. Let's see here. When did I do my last scan? I don't even remember. Shopify building higher lows here. Like you can kind of see it here. And you have a range break, kind of building up. I don't know. I think a lot of stocks are setting up. They're not ready yet, but there are some healthy signs. Oh, I got disconnected. Oh well, I just have to get back in before the queues start. Okay, let's see here. ETF, yeah. This MIK is probably going to stop me out. Oh my god. Oh, I should have traded the opening range highs. Oh, I don't want to chase this candle here. I would have to use like a 40-cent stop when I could have had 10-cent stop on the trade. Oh, BBBY is coming in a little bit. We'll see how sustainable this gap up is. I think they're gonna slam it back down. Netflix perking. Netflix. Oh, Netflix. Oh, this was Netflix. Okay, yeah. Has a lot of overhead resistance. This thing probably needs months and months to set up again, I think. Microsoft is strong. Holy shit. What do you think of the former leader? Well, Roku, I'm not gonna pull up the chart because it hurts to look at it. I mean, it probably would have been like a 50k trade for me if I hadn't gotten shaken out. But I'm gonna look at Okta. Yeah, like I've been talking about this thing for a week now. Like they pulled back. They found a lot of them have found support around the rising 200-day and 150-day moving averages. And yeah, a lot of them are starting to move higher. Now, question is, are they just dead cat bounces, or are we going to have a real rally in those things? Like one I'm watching is this TTD. Like this thing hasn't gone higher, but it's the same chart. Like big move past few years. Very clean. Like look at how clean the moving averages are. There's no shock. They're like big clean moves. Pulled back, found some support, undercut the 200-day, and now it's trying to kind of flag. Or this is not a flag, but like it's building a range. It's not a flag, but it's a range. It could very easily break out of this range, go back to 250 or something like that. When day trading, opening can break out the opening candle, did you move stop loss to break even quickly or leaving it on low of day? When trading on the long side, well, yeah, I mean, if you're day trading, your risk reward is usually smaller, so you have to move your stops more aggressively. Like if I buy something like an earnings capper or something, I don't move my stop. Sometimes I don't move my stop for weeks. But just as a day trader, you know, you have to start moving your stop aggressively, especially if this trade works, because you don't want to give anything back because the risk reward is so small. Generally, you're not going for 20 or 50 times your initial risk. You're gonna go for a trade that's 2, 3, maybe 5 times your initial risk. So yeah, oh my god, MIK. I think I'm very close getting stopped out. Yep, shop. What is your average holding period, and what kind of portfolio drawdown, kind of longer term trading versus well, my portfolio drawdowns have definitely been smaller since I stopped shorting. Well, since shorting momentum stocks was my main money maker. Like I'm more diversified now, and I don't take as much risk. I mean, I used to have like I once had a 50% drawdown, and I've had a lot of like 20% intraday drawdowns in my accounts. This is something that's not happening anymore. Like if I have a drawdown, it takes me several weeks or several months for that to occur. I'm not gonna have a 10% drawdown in a day. That's not happening anymore. Hasn't happened in many years. But 10% drawdowns, I have them like every year, multiple 10% drawdowns. But they usually take several weeks. It is safe to look on Roku now. It faded green to red. Okay, good. I'm gonna look at Roku. Yeah. Okay, good. I hope it goes back down to 100. The stock is not allowed to go up anymore. I want it to go back to 100, build a new base, and give me a new opportunity to get back in. Oh boy, it's been so slow. Really slow trading environment. What is your average holding? Sorry, I missed that part of the question. I don't have an average holding period. I don't know. I don't keep track of that. But like I mean, if a stock works, I mean, I can hold it for several quarters, at least partials. I can hold partials for several quarters. But mostly maybe a few weeks, I guess, would be the average holding period. But a lot of stocks I buy and then I get stopped out the same day or the next day or within a few days. So those are the ones that's holding down my average. But if you look at my big winners, like Nugget and Roku and some others I've had this year, those were multi-month holds or even like almost 6-month holds. Yes, I hold through earnings. Yes, yep, I do. If I have a good profit cushion, I hold through. Like EMPH, I bought it on this earnings breakout here, and I held through it. This was another earnings breakout. I was long during that. Roku, the same thing, had an earnings breakout, and I held long during this earnings breakout. Now these are like extreme winning examples. Of course, you know, this thing could have gapped down and stopped me out, right? But yes, I do hold through earnings. If I have a good profit cushion, that is. How many positions do you typically have at one time? Do you allocate same? No, I have very different portfolio allocations. Like I can have everything from like around 5% positions up to like 25%-ish positions, depending on the liquidity and my conviction. How many positions I hold? Well, in a good market, I can be up like, let's say if the market has been running for a few months, I can be in 15, 20 positions, no problem. And I can also be all cash. Like if the market is really bad, I'll be in all cash. But usually I would say I have around 5 to 10. And they are usually between 5 to 25% of my portfolio. Or all my total equity, I mean. Like right now, these positions, they're all very, very small. These are... I mean, most of these are even smaller than 5%. Like this DDS, this is like literally 1% of my portfolio or my total equity. JCP also. Or no, JCP, this is the one that's 1% of my total equity. Just tiny, tiny position. These are all like small piece of shit positions, but there's nothing else to trade right now. Nothing else for me to trade. None of the liquid stocks are setting up, except for Roku. Roku, I had about a $500,000 position, but I got stopped out. Or actually, it was more than $500,000. No, it was about $500,000. Well, those are the kind of position size I look for. But most of the positions right now that I have, they're like 100,000, 150,000. Can you explain the Roku setup? Well, the Roku setup, I've been going through this a lot the past week. You know, big earnings winner over the past year. Very strong earnings, strong outlook, right? Then he pulled back together with all the other extended momentum names, found support on this rising moving average, put in a little bit around the bottom, and then he had a range break. So I saw a very good risk reward. I traded it, and I kind of had it too tight of a stop, so I got stopped out the next day. The stock went like 50 cents lower, and now it turned around and went higher. That's the Roku setup I saw. So I bought it perfectly, but I sold it. My mistake was I tightened up the stop too soon. I shouldn't have done that. Yeah, that was the setup. And the same day, there were a bunch of other momentum stocks breaking, like this Okta, and this one didn't look that good. It was kind of a shoppy, but there was another one that had a really beautiful, was it Doku? Well, Doku also had a little bit of shoppy breakout, but it had the best follow through. But there was another one, I don't even remember the ticker right now. Q, I think it was Q. Yeah, Q. No, yeah, that was another one. But I think the one I'm thinking of, I can't remember. Oh no, RLGY, it's gonna stop me out. It's going to stop me out. Again, tiny loss. SCBG. And MIK is very close stopping me out. Yeah, that's trading in a choppy market in a nutshell. Don't do it. Don't swing trade in a choppy market. It's stupid. Like nothing has any juice. Nothing. Completely dead. I have very high expectations of everything I trade. Very high expectations. And right now my expectations are not fulfilled. Not at all. Okay, one last question. Do you care about macroeconomic indicators, inflation, GDP per country, region, trading block, or are you more focused on charts and earnings? Macro doesn't, this is irrelevant. Like, if the macro is good and the charts are shit, it doesn't matter, like, if the macro is good. The charts are shit, like, you're not gonna make any money. And if the macro is shit and the charts are good, who cares that the macro is shit? You're gonna make money, right? These fundamentals, like, if you are, unless you're running 100 million, you probably shouldn't care about the macro at all. Okay, now I'll cut it. Thank you all. See you tomorrow.